All right. Actually, we were the first Tezos venture that DGH got behind. Tim Draper famously, even if you don't know much about Tezos, he backed the initial crowd sale of Tezos. It was a $232 million crowd sale for that blockchain, and it was at the time, and I think still, given the time parameter, the greatest crowd sale of all time. Only $232 million in just a few weeks. But anyway, getting back to this, someone commented on this front slide and saying, this is too wordy. You need a hook. It's too much. I agree. This sucks. Let's move forward. There you go. I think every deck should have one of these. TLDR, you know where I'm going with it. So to get through this, we're going to talk about a few key points, and these kind of lead into each other. So first of all, we're going to discuss why finance and DeFi. Most people here are probably familiar with this, so you might want to just tune out for the first second. But if you're not, why DeFi is the greatest place in crypto right now, why that's the thing to get behind. Other stuff is great too, but why is it the keystone? Why is DeFi the keystone? And Tezos is the most undervalued opportunity in DeFi. Why is that? So many blockchains. So many blockchains can come up. And sure, we're diversifying into a multi-chain world, but why Tezos? Tezos is actually the ideal blockchain for DeFi. And through now, whereas it wasn't even technically possible to have a scale DeFi ecosystem on Tezos protocol, key upgrades have made it excellent for that, not only enabling it, but making it excellent for that. Then we'll get into StableTech strategy and why we believe this is the best strategy for taking on the Tezos DeFi world and what it's going to mean over the years to come. And then lastly, we'll get into the TRU token, which is really the instrument for an investor on how to get in on this, how to get in on the activities that StableTech is doing. Okay, let's get into it. So if you want to get into the future of Tezos DeFi, TRU is the instrument to own. That is the token. We'll get more to that later. And what you'll see is that this actually leads to other platform tokens that I'll be discussing as the strategy for Tezos DeFi and for, well, our strategy for Tezos DeFi through StableTech. Okay, so why DeFi? Well, if you look at the history of DeFi, we've hit a point where we're in the tens of billions of dollars in liquidity. TVL is a good measure of it. And we've also gotten to hundreds of billions of dollars collectively at the peak. At the peak of 2020, it was $240 billion. That's where we were. But now we can start to see an expanded DeFi world. What DeFi is it's taking on finance and disrupting that and bringing it into the blockchain world. It is the future of finance, not just a financial add-on. So there's a long way to go. We're talking hundreds of quadrillions of dollars of derivatives, and even just in cash capital markets, we're talking about $100 trillion. And with every technological shift, it's always finance that leads the game. That's true since the history of stock tickers through fax and the internet, the computerization of bank records. It's always the finance industry that takes it on first, and that's what bankrolls everything else. So, seen this overall, TVL for DeFi growing strong. You know, this is just kind of a deep breath in to show where it can go, but we haven't even scratched the surface yet. But why Tezos DeFi? So, if we look at, these are all the different, this is like a month or so old, but you can see from this graph, it used to be Ethereum that was the only DeFi blockchain. That was it. That was almost everything. But what we've seen over the last couple of years is that that's diversified a lot. And at one point, it was down to 50% Ethereum, from 100% to 50%. And if you ask any venture capitalist, they'll tell you, oh yeah, multi-chain's the future. Do you got a multi-chain venture? We want to get behind a multi-chain venture. And that's great. That's good logic because, I mean, these blockchains are all open source. There's new ones coming out every day. They're all cannibalizing each other because of hard forks and whatnot. So how do we know certain chains are going to be around next year or the year after? It's a lot to get behind one particular chain. But in a multi-chain world, what you'll find if you ask developers, it's really hard to do multiple blockchains at once. So for a venture capitalist looking for multi-chain, it's better to diversify a portfolio among specialized ventures within specialized blockchains as opposed to one that would be a jack of all trades, master of none. Those teams would sacrifice a lot not to get anything innovative, and it would actually hurt more than help. But what do we know? What chains can we trust? What's set up to be one of these little multicolored things to be in the diversified DeFi world of the future? Why is Tezos so great? It's actually very low for TVL right now. It's not even close to any of these. Well, the timing of it is a big deal. Tezos is actually the ideal blockchain, and that's for DeFi. And that's not just because of its technology, it's because of its governance. The governance is very key. But also, if you've looked at other areas of crypto overall, over areas of blockchain, NFTs, STOs, you'll know that Tezos is actually number 3 for NFTs. Arguably, when you come to fine art NFTs, it's actually number 1. And it's done this organically. So a lot of criticism you can levy against maybe platforms and even blockchain ecosystems that just pump the money in to get popularity and relevance right now. But Tezos has done it organically. It's a very conservative ethos in that sense. And yeah, so we can see comparatively, here are a bunch of other chains going on. So I mentioned NFTs, STOs. Tezos is actually number 2 for STOs. There's over $2 billion tokenized in securities, real estate, and companies that do that, Vertalo, Equisafe, which is huge, elevated returns as well. So Tezos is doing very well for STOs. Formal verification, what this means for finance, anything dealing with sensitive numbers. You want a protocol that's built with that in mind, something that's it's pure. What it really means is a computational number in, you get a clean number out without going through a Rube Goldberg's device of intermittent steps. Anything dealing with sensitive numbers in which errors to the 0.00000 digit matter, you're going to want to care. You're going to want to get formal verification, something that lends itself well to that. Tezos being built in OCaml, a language that was built by mathematicians for mathematicians, and Tezos was actually criticized in 2017 for instituting that language. Thought like, oh, this is something nobody knows. It actually didn't matter so much. And the smart contracting language built on top of it, Michelson, which is built on OCaml, that has a lot of bridge languages now too. You can write in Python, you can write in TypeScript, you can write in so many things, and more are coming out all the time. But that's why Tezos has the second greatest developer interest of any blockchain out there, according to a Bank of America article last year, early this year actually. But the thing I really want to focus on, and everyone should pay attention to, is on-chain governance. On-chain governance is the key to why Tezos is so ideal. A lot of stuff can be corrected, fixed, upgraded, but on-chain governance is the feature that leads to all those other improvements. It's what enables a self-improved mechanism within Tezos. Whereas other blockchains, their approach is fork forward. It's a fork-based approach. So you put out an upgrade, you get all the validators to come and join your upgrade, and that leads to contentious hard forks. We've seen not just Ethereum Classic, or Bitcoin Cash, but even Bitcoin Cash, I think, is the interesting one because that actually split, a lot of people forget, into 2 different blockchains. The thing that we have on the charts as Bitcoin Cash now is not what was called Bitcoin Cash before. Actually, the thing that was originally called Bitcoin Cash is now Bitcoin SV, and then a hard fork that came later on called Bitcoin Cash ABC became what's now called Bitcoin Cash. I remember one day when on CoinMarketCap, and they put a big letter saying, we realize there's disputes in the community, but now, as we've seen the market cap go of this hard fork exceed that of the original, we can now, for all intents and purposes, we'll say that this is Bitcoin Cash. And those are the designations that remain today. The problem with that is, whenever you have a contentious hard fork, all the assets that are on top of that blockchain from all the smart contracts are effectively duplicated. This is a problem that a lot of people are not talking about, but it matters so much. JP Morgan put out a concern after the Ethereum merge, which was actually a hard fork. They call it a merge, but it was a hard fork. And saying that they're getting worried about their investments because of the divisions within the Ethereum community, and they're still not all on board. There's a proof of work chain and people who are going with that, and they believe that the proof of stake chain will collapse under its own weight. And that story isn't finished yet. The thing is, it doesn't have to be an equal division, and it doesn't have to lead to a contentious hard fork for there to be a problem. Just some probability that it will happen is enough to disrupt your actuarial tables to lower the value of the asset. If you're talking about putting trillions, let alone quadrillions of dollars on a blockchain, you cannot let disputes within the community disrupt that value. You cannot have that. It's completely untenable. So what does Tezos do? Tezos actually has all the contentions that are happening within the community play out on chain. So people propose upgrades, changes to the blockchain, the validators vote on it, and then by an 80% supermajority of a majority quorum, there's an agreement or otherwise, and it's not a rubber stamp. Sometimes we've disagreed and then it had to go back to the first stage of governance. But in the end, everyone ultimately yields to that upgrade that was brought by the blockchain itself. So we don't need hard forks. That is key for finance. I honestly don't know how you can do any digital assets without it. Okay, so that's why Tezos. So why now? Well, one of the things we've been missing, because it seems like, oh, well, aren't we kind of behind in the DeFi realm? Well, no. Actually, what happened was we didn't have a full protocol upgrade that would enable what we needed to do some of the key aspects of DeFi technologically, and that's because of the security mechanism that was that was implemented to prevent reentrancy attacks. It gets more technical, but basically that's been corrected over this last year, and we were actually building the final piece of what would be the full DeFi cycle. I'll get to that. And this will get us into StableTech, because we've been talking about sort of the basis behind it. But we actually rebuilt and upgraded it to go along with the Tezos protocol upgrades to make it even more solid and comply with the newer standards that are brought in. And there are more exciting things to come. But what that means is basically to have a scaled DeFi ecosystem, you need three things. You need hard-backed stablecoins, okay? So we're not talking algo coins. We're talking about hard-backed, backed by a dollar, backed by a true asset. You need decentralized trading. Okay, a lot of automated market makers, DEXs, we've seen that, okay. And then the key thing, you need decentralized lending, like a Compound or an Aave. Without that, no DeFi ecosystem can scale. Forget about DeFi, no financial ecosystem can scale if you don't have a lending system, if you don't have a system of credit where you can lend asset to asset, put something down as collateral and then leverage that for a borrowing position. So that's what we were missing until relatively recently. We actually put out the first DeFi lending system on Tezos called TezFin. So I'll talk about that more in a second. But the key about these three things, not only do they scale DeFi in and of itself, and not only does lending let all those other aspects just grow to the point that they need to be, but they're the key. Like that's the ingredient kit to get all these other things in the world of derivatives. You have equities, you have debts. Okay, now you can make derivatives. So insurance, forwards, futures, options, swaps, you can do all that now. And here's a timeline. So we didn't have those critical protocol upgrades until earlier this year. It wasn't until just a month or so ago that we had the first lending system on Tezos launch, which is under audit now. So the beta's out there. You can go to tezos.finance and check it out. And all right, talk about this. Yeah, okay. So as talked about before, we have StableTez at StableTech, and this is the approach that we took so we could get to all those layer 2 derivatives and prime and layer 1 derivatives as well. So StableTez, Tezos stablecoins, so those are hard-backed stablecoins. The SABS token is what governs that. And you have TezX, and that's more, think of that more like, well, it started out as the first cross-chain bridge on Tezos, but now we're actually adding an aggregate exchange for liquidity. So it'll be more like a curve.fi. And then TezFin, of course, as mentioned, it's the lending system on Tezos. What we're going to get to is not only derivatives for those, but also an L2 network. Now, this is another upgrade that was implemented recently. We didn't have the ability to do layer 2s until recently. And now, with those recent upgrades that, again, came in 2022 to the Tezos protocol, not only can we do L2s, but we have something called enshrined rollups, where we can actually take other chains, and we can actually run like Ethereum apps on other chains, and we can run them on Tezos. Like a virtual machine within Tezos, and so we can interoperate with them. That's something that was asked of for a long period of time. We never really, it wasn't really a big deal before. I mean, it's still not terribly that big of a deal to have interoperability between wholly different blockchains. It actually kind of slows you down, but we can do it now. So I think that would be very incentivizing in the future. So as we get more into how the distribution works, the tokens that will lead not only to those tokens for those individual platforms will also lead to the layer 2 coming in. And so you can see them all here. I want to get into StableTez. So, and this was the first stablecoin on Tezos was USD Tez. That's what we put out in 2020. There wasn't even an exchange yet. That's how early we were on this, where we decided to specialize in Tezos. So full reserve, audits every month. We had full convertibility, US compliance, KYC vetting, all that good stuff. You can buy with a credit card if you want thanks to Wirt. You can get on and off from USD Tez. A lot of great traction over time, and we'll talk more about this, but basically TRU holders will be able to get the Genesis tokens of SABS, which governs it. Participants will get another third of it, and that would go for here, so like liquidity providers, and then ultimately the stakers of either would be able to get the full third at the end. And then TezX, we started the first cross-chain bridge on Tezos. So that allowed for an Ethereum to Tezos token swap. No one had done that before. So we did that, and that suited us through last year. But now as we're getting more and more exchanges, at the time I think there were only 2 exchanges on Tezos. Really only 1.5, technically. But now that we have so many, now the time for aggregation has come. So we're going to be adding a liquidity aggregator, and that's being built right now. So similar model for TezX, for TZX token. Genesis holders TRU holders get the Genesis amount. Stakers, liquidity providers can fill in for the rest. And in this way, it's also more decentralized because it's not like the people who initiate it actually have the full control. Everybody has control. And TezFin, pool-based lending, so it's like a compounder Aave. And to give you some context there, most of DeFi is lending, just outright. You can very easily argue that it's for like over 60%. And as for the rest of it, it's only scaled because of lending. So, and every way you look at it, like the liquidity, it's mostly in lending. The timing of it, before Ethereum had any lending protocols, it was about the size of Tezos today. Ethereum DeFi was. Similar model for distribution of those tokens. Of course, all of these are put in proposal and they get qualified through governance stage by stage. And so that brings us to TRU finally. So SABS, TZX, TFIN. These are the 3 tokens that come from TRU token, and that's what gets you an investment within the Tezos DeFi ecosystem. So these are the primary platforms, and I think in terms of primaries, primitives. These are the things that are used. Not only are they the biggest platforms in their equivalency on other chains, but they are what lead to all of the other things we're going to see in DeFi in general to come, all those derivatives to come. And the way that this is issued, and I think this is really cool. I'm surprised more people don't even adopt this type of model. So the TRU tokens they're distributed by a nonprofit, non-shareholder foundation called Tezos Stablecoin Foundation. We're actually going to update the name. It's going to be a Stable Asset Foundation to sort of broaden the scope. But for now, Tezos Stablecoin Foundation. The key about it being issued by a nonprofit, non-shareholder foundation, which is also the thing that owns StableTech, is that it is something that does not hold any equity. So all of the equity in StableTech is owned by Tezos Stablecoin Foundation, which is owned by no one because it's a non-shareholder foundation. So all of the value is concentrated in the token, in the TRU token. And so anything I get as a reward, any of the other partners, they all get it from the TRU token, which is the same thing an investor gets. And here are some of the other partners that we've brought in. So WealthChain, that's my company. Draper Goren Holm, first seed investor. They're advisors as well. Cryptonomic, they're the lead development firm on Tezos. And they've built a lot of the infrastructure from wallets to block explorers to all of the back-end infrastructure that we saw for many of the initial ventures that came out and really made a name for Tezos in those early DApp days. Yellow Tech Security, TokenSoft, of course, for KYC. They've been our partner throughout. They've been great. Which is backed by Quincy Jones. I think they had a over $62 million round before this. That's probably the most well-funded venture on Tezos. And what they were able to do, and what they've been able to issue is not only a partnership they have a partnership with Warner Music, a preferred NFT partnership. They also have exclusive partnership with the Recording Academy and the Grammys. Yeah, they bring in a lot of star power in their own right. What our deal is for DeFi investing. So whereas they get a lot of revenue in these assets, they can put it in our platforms. And that's going to show a model for enterprise going forward. So I feel that's very strong. And Pirates Labs, which is one of the other great companies on Tezos, which created Dogami, which is the most popular collection on Tezos, NFT collection and game. And they've been spearheading the way from infrastructural development to DeFi and so many other great aspects. So here's another view of how the governance will decentralize. Ultimately, everything a TRU holder gets is a one-of-one token that goes to SABS, TZX, and TFIN. The max supply would be 3 times that, as distributed in the models previously discussed. Ultimately, these governance models need to decentralize as well. So SABS will be run by a SABS DAO, TZX by a TZX DAO, TFIN by a TFIN DAO, and those govern the platforms. Likewise, we've done this thing. And OK, and wrapping up. So, and here's the distribution of where the tokens go to. So we have the backers, the investors. So DGH is a part of that. That would include anybody who wants to get in. The members, those companies that I mentioned to you, so developers, advisors as well, they're brought in. And this is a 30-30-30 model, which I think is great for ethos, particularly the Tezos community ethos and decentralization ethos, that no one would control the protocol, that ultimately it has to yield to what the consensus agrees. So nothing can be done without consensus. And then, so the founders, that includes us, and then the Tezos Stablecoin Foundation, which is where the last bit is issued, and that would be going for sort of a long-term reserve, just much like the Tezos distribution of their tokens as well. Some of it went to the foundation. And so you can see the distribution, the different team members. So here's some of the team members we have on board. You see DGH up in here, a lot of Bilal from Pirates Labs, Mason from Tokensoft, and the fantastic team of developers from Cryptonomic, as well as Yellowtech, who have been helping us with security and scalability. And they are really, Cryptonomic, as you can see, it's definitely the lion's share. They've been with us from the start. They're a founding partner within the StableTech ecosystem. So where are we at now with backers? So Draper Gordon Holm, they came in early on. We had private investors this was the seed round, so DGH seeded it. It starts from a SAFT, so simple agreement for future tokens, and then that ultimately leads to the distribution of TRU tokens, which leads to the distribution of all of the descendant tokens. Okay. And so we're at here right now. So we've done their seed rounds. We're partly through our private sale round 2. The round 3 we want it to be a public sale because we want to include the broader community. So we're at the private sale round now. We're about halfway through. You can contact me if you are interested in learning more about that. And the valuation does double per round. And again, we're probably going to be updating the Tezos Stablecoin Foundation to Stable Asset Foundation, which I'm really excited about as it broadens the scope. And one of the greatest advantages of that, why not Tezos Foundation? Isn't there a Tezos Foundation? Whereas they're appealing to a broad development of this overall technology project called Tezos Blockchain, we're focused on DeFi and DeFi technologies and creating these decentralized economies. And that means our interest and clarity of mission is specified for DeFi and not sort of broader. I'm sure that Tezos Foundation doesn't want regulators viewing them as any kind of a bank or that sort. So we can continue to fund with the earnings, not just our initial platforms, those primitives, but the layer 2 and all of the participating firms that will be able to develop on top of it. Okay, so if you like what you heard at all, reach out to me later on, or you can contact through any of these addresses. Yes. Okay, thank you very much. Any questions? Adele. Why am I so awesome? I don't know. Ask my parents. Anything else? Okay.